Toronto-based Axia Real Assets is proposing to acquire Plaza Retail REIT in a transaction that values the retail property owner and developer at $1.23 billion. Now, Plaza is a leading retail real estate owner and developer focused on Ontario, Quebec, and Atlantic Canada. Let's get more from Jeffrey Olin. He's president and CEO of Vision Capital. Jeffrey, thanks for joining us today.
Thanks for having me.
So Axia says it's made several offers to the board already, pretty much been ignored. What is driving Axia's interest here?
You know, this is a great asset. Plaza was co-founded by Michael Zakuta and Earl Brewer. Michael was the CEO and really the driving force. He's probably the most talented, or certainly amongst the most talented and capable real estate developers for retail in the country, and he personally curated this portfolio. So it's not a hodgepodge of assets that were acquired. He curated them, he picked the location, he did the tenant mix, he's got the access and egress. So it's a very high quality portfolio with convenience, grocery anchored, pharmacy anchored, and is quite reasonably valued and trading at a discount to the underlying net asset value of what it's worth as real estate. And I think some of those are the factors that are driving this.
Okay, so do you see Plaza as struggling as Axia does?
No, there's nothing struggling about it. It's extremely well managed. Michael has moved on to chair. He's got Jason as Pavarano, if I recall his surname correctly, as the CEO. Michael mentored him. The assets are solid. There's no distress here whatsoever. It's undervalued. There's no question about it. But in terms of the proposal at hand, it's not an unreasonable price, but they're basing it on what's known as IFRS value, which is supposedly the market value under accounting treatment of the assets net of liabilities. Well, IFRS values are lagging indicators because they're based on appraisals, and appraisals are lagging indicators where the markets are going up or down. And what is evident is cap rates, the unlevered return to buy real estate, are coming down. So values are going up. And we've seen this. We've seen Blackstone purchase REIT in New York Stock Exchange last year, Retail Opportunity Investment Corp, at a 35% premium to what's trading at. We've seen it more recently here in Canada with the partnership of KingSett and Choice REIT buying First Capital, or proposing to buy First Capital REIT at an 8% premium to the IFRS valuation. And so it's not an unreasonable price, but when you look at Plaza as well, they also have about 10 properties under development, 400,000 square feet, which is future upside for the REIT that would not be fully encapsulated in IFRS valuations today.
Okay, Jeffrey, I know that the largest unit holder seems to be on board, according to Axia. How key is that?
I'm sorry, the largest
unit holder, shareholder, is on board, according to Axia. How key is that? How much weight will that have with the board?
Well, the largest unit holder is Morguard Corporation, and it's certainly a credible and significant corporation and a shareholder. The two largest shareholders combined are the co-founders, Earl Brewer and Mike Zakuta, and they own together 20%. And they have a very loyal following, particularly in Atlantic Canada and Montreal. They are recognized for their skill set, and folks have been with them for a long time. And so the fact that the largest shareholder, 15%, is supportive is helpful, but in our view, not sufficient to enable a transaction to succeed on an unsolicited basis.
Okay, so if Plaza's board continues to reject or just not answer the offer that Axia has, what happens next? You think that Axia will go back and come up with a better offer? As you mentioned, there are a couple of things that may have been ignored.
I think it's conceivable. I don't know them very well. I think this is, a fee-generating asset for them in terms of them being in the asset management business. But I think that there are other players that would be interested in this portfolio. It's of high quality. And so it's difficult to speculate on whether they come back with a higher bid, but I think they formed a special committee. They are responsible people at the helm here. and I'm confident to do the right thing for their unit holders.
You mentioned sort of we've seen recently some of these potential acquisitions. Do you think we're going to see more of this in Canada?
We're going to see more of it globally. REITs have just concluded last year the worst 5-year period for REIT performance since the GFC. Today, it's a different situation, and they're cheap.
Okay.
REITs are trading at the cheapest 1% relative to the S&P 500 in history.
I've got about 20 seconds just to let you know.
The only time REITs traded as cheap relative to the S&P 500 was in the dot-com boom, and then the dot-com bust. The U.S. REIT index outperformed the S&P 500 for 7 years in a row. That ain't a forecast, but REITs are cheap, and the difference between real estate, just to wrap up, and any other asset class is there's an arbitrage between the public and private markets, and you're seeing it today with this transaction.
Jeffrey Olin, gotta go. Thanks very much for joining us, and thank you for joining us today on The Close. We'll see you back here tomorrow.